Here's what we're watching heading into tomorrow and why it matters for your portfolio. Tensions in the Middle East escalated again, with Iran and Israel exchanging missile fire and Tehran targeting Gulf states. Even with renewed efforts from Washington to push peace talks, both sides appear willing to continue. Which is why markets are starting to price in a longer conflict timeline. You're already seeing that show up in markets. Stocks are on pace for their longest weekly losing streak since 2022, while oil prices continue to move higher as traders hedge against prolonged disruption. At the same time, the Federal Reserve is watching this closely. Officials are signaling concern that this could reignite inflation pressures. But for now, they're staying patient and holding rates steady as they assess the impact. One of the more important under-the-surface developments right now, the 10-year Treasury yield is sitting around 4.4%, but based on traditional models, it likely should be closer to 3.9%. That gap is being driven by things like fiscal concerns, quantitative tightening, and weaker foreign demand, and it's a big reason why markets feel more unstable than the headlines alone would suggest. Meanwhile, AI continues to dominate the long-term narrative, with reports of a potential $60 billion IPO in the space, while other areas like space tourism are struggling to gain traction due to cost and demand challenges. The key takeaway, this is a market being driven by macro uncertainty, not just fundamentals. That's why positioning, risk management, and staying disciplined matter more than trying to react to every headline. We'll continue to monitor this closely and keep you updated.